Welcome to our Tradespoon stock and option picks of the day. This is for December 24th, 2013, and we're going to take a look at a long position in American Express AXP. You're seeing our proprietary risk and reward level and calculation right at 3, so on the low end of our calculation scale, and our value momentum indicator is at a 7. And again, going over these question marks can give you more detailed information on how we came up with those scores. Let's take a look at the American Express price action over the last 52 weeks. And you can see that the stock closed on the 23rd of December at 88.31. That's right off the 52-week high here at 88.58. And the 52-week low is at 55.88. So the stock has been in a bullish trend. You see the volatility currently at 18. And the expiration of the options that we're going to be looking at are going to be in January of 2014. That's the 18th. So the stock pick, we're going to look at buying stock for American Express at 88.31. Now your exit price for a profit is going to be $9 higher. So basically you're looking at right around that 97 level, plus or minus some change. And your stop loss is going to be at $9 lower than that. So you're roughly looking at around a $79 target, where you would cut out of the trade if it actually is working against you. And you can set those up usually at your brokerage firm as a simultaneous order. In other words, what's called a one cancels other. And we'll have webinars on that in the future. The options trade is buying the $87.50 calls that expire in January of 2014. Now you're going to be paying $2 for that, so your max risk is $2. And that also is your stop loss. In other words, we will be willing to risk at this juncture all of that premium that we're paying, that $200 per contract. Now again, you can use different risk management tactics, but that's what we're suggesting at this stage. Your target gain is going to be $2, so it's going to be your entry price $2 plus $2 target gain, so $4 exit price. In other words, if you put a $4 limit in there, good till cancel, and it gets hit, that would be your exit price. Now for those of you that want to mitigate some of that purchase price of the $87.50 call, and are willing to give up that unlimited risk of profit potential to the upside, in other words, above, let's say, $90, you could sell those $90 calls that expire in the same month and receive 85 cents, which now reduces your cost basis by that amount. So your risk is $115 per spread contract. Now, you will cut out of the trade right at around $2.30. You take your entry price, which is $1.15 for the spread. I took the debit and the credit that I received, and I added $1.15, so it's roughly around $2.30. Now, if you've never traded an option or you've traded single leg options and you're going to trade a spread for the first time, check out our virtual trade here at Tradespoon. As always, we have detailed stock background and analysis. You can see we have our proprietary charts. You can also check out any key stock events so that you're really going to start to understand the fundamental and technical components and see what the news and commentary is. And as always, you can, if you need any help, you can email us at info@tradespoon.com and use any one of our videos going forward. So, ladies and gentlemen, I want to thank you very much for taking a look at our stock pick for December 24th, and I want to wish everybody a great holiday. Take care and have a wonderful holiday.